Good evening, everybody. My name is Ankush Ahuja. I take care of the business development and investments at hBits. I would like to thank each one of you who've actually spared time today and actually have joined this webinar to look at this vital opportunity from our end. As a company, we've actually doing very positive at the onset of 2021. Our assets under management as we speak is around 60 crores. And last month has been very welcoming when we raised a 40 crore asset within our own set of investors. And this was an opportunity back in Mumbai. I hope everybody back at your end are safe and sound, and we all see a welcoming 2021 and get over this pandemic and look forward for a positive tomorrow. The opportunity which I'm really here to present at this point in time is the hBits ICICI and IIFL opportunity, which is for a limited period. We started around 10 days back, and we aspire to quickly raise the asset within March itself for benefits for the customers and the overall investors. That's from our side. An opportunity which is very vital right here. I'm talking about the Ahuja Center Point, which is back in Andheri East, and the opportunity started about 10 days back, and we've seen some very tremendous response from the investors and partners for us. We aspire to actually complete this asset in March itself, and we now subscribe by 25%. To take you quickly to the investment overview, very welcoming rental yield, which will be, I think, accepted by all investors and partners. We are at about 9.2% with a targeted IRR of 15.4%, which we are envisaging over a period of 4 years. No second thoughts about the tenant. I think tenant actually are the key drivers for any leased building. ICICI Bank and IIFL are both leaders in the banking and financial services space. In terms of the agreement period, we have a 9 years lease term with ICICI and a 5-year term with IIFL. Accordingly, 3 years again lock-in from ICICI and a 5 years lock-in from Infoline. The very welcoming thing as a new era for all of us, the minimum ticket size is 25 lakh for which you can enter with the investment, and you can have multiples on that. And talking about the building, I think the building is very, very well placed from an overall perspective. We've got the 6th floor and the 7th floor, which are out there for subscription. 6th floor is occupied by ICICI, and the 7th floor by India Infoline. Andheri as a location talks about itself. So again, talking about the location, I think for any asset to be successful, location is the key driver for an asset to be successful or not being successful. So here, I think there is no brainers. I'm sure Andheri East is a center and a key point for any corporate to think about whether they want to open an office. I think it's actually surrounded by some key drivers, the international and the domestic airport, very, very important. You have the MIDC metro station coming up. You have the SEEPZ. All the IT hubs and commercial spaces are all around. So for any corporates to take an office on rent, I think the first choice of contention will be the Andheri East location. To talk about the Mumbai office space, that's been very promising in the recent times. Around 16% of the market share of grade A plus offices spaces is occupied by the 500 corporates in India. So that's very welcoming. Bombay has been a strong city. I think it's a financial hub of the country. To talk about the office stock absorption, I think it's about 125 million square feet. Net absorption in 2019 was 5.18 million square feet. The new completions, which is very important, is 5.21 million square feet. So as Bombay, I think no larger corporate can miss the location for sure. And it's promising in the near future as well. To talk about the micro market in Bombay, when we see that our location is located in the western part of the Mumbai, which is Andheri location, and we have different offices and different locations which are there. So every location carries its own advantages. If you talk about Lower Parel, I think it is a commercial suburb of Mumbai and house of the upscale residential and commercial buildings. So it's a mixed blend, right? But BKC again, major occupiers are established in the Indian corporates and public sector companies. But if you specifically look at the Andheri location, it's a perfect blend. You've got the residential, you've got the retail developments, you've got the banks, you've got hotels, grade A offices, exhibition centers. So as a corporate, the first choice of any large business house will be Andheri Kola Road, and I think Andheri East location specifically. So it is going to be very long term from a perspective where the corporate is coming in and they want to set up, because you also have to see the employee centricity and obviously the location preference for people traveling back to Bombay and moving out of the city. So I think these are very, very important news, which are right there. Some of these snippets which you actually penned down. I think the recent past, we've seen the Mumbai government actually giving a lot of impetus on making it the lowest in terms of the stamp duty and interest rates. So there is a driver from the government as well to make the real estate commercial sector a more lucrative sector for all the investors. Some of the large giants like Morgan Stanley picked up around 1.5 million square feet of office space on a long-term lease of 9.3 years at the Oberoi Realty under construction project. So that is again a welcoming thing that the government, the drivers of the country are taking extensive effort to actually make it a most wanted sector for the public as well. So again, recently we've seen about 240 for 41 over percent of quarter-to-quarter growth in terms of the operative absorption as well in the commercial sector. Some of the news which are very welcoming for the investors to think about how can we take it forward. Location and connectivity, I think it's right eminent in this slide. We are right at the center of Bombay. You see a comprehensive location map right here. So to take you to some of the relative cities around the country and internationally, you have MG Road in Bangalore. You can't miss that. For any corporate, you really can't miss that. The location is very comprehensive. Likewise, Golf Course Road in Gurgaon. It's the connecting wire for the Gurgaon region. Connaught Place in Delhi, you can't miss that, and Chiangzai Road in Dubai. So see some of the examples which are very, very comprehensive, relative examples which are there. Similarly, for us, we are at in the city talks about the location talks about itself. We've got the Kala Metro Station Line 1, which is right at 900-meter walking distance. We've got the very promising MIDC Metro Station Line 3, which is the first underground metro line for the city, which is 33.5 kilometers long. And it's going to be a very, very welcoming point for the city. So a preference of any corporate, again, with this metro line coming up very soon, will be very promising. Again, from the Mumbai International Airport and the domestic airport, I think for any corporate to think about how closer are we to the airport. People come in, move out. There are global companies which really give it a preference to any corporate if it's near to the airport. Again, prime hotels like Radisson is also nearby. It's 600 meters. For any decision for a corporate, the location, it talks about itself. So, talking about the tenants in our neighborhood to the Akuti center point, I think we have a very promising neighborhood which defines in terms of the upside and the rentals. We talk about the JP Morgan of the world. You have Larsen and Toubro. You got the IndusInd Bank, HDFC Bank, Accenture, Havells, L'Oreal, and Panasonic. So these some of the very, very prominent, I would say, tenants in the neighborhood. And this is within the 3 to 5 kilometers of range. To talk about some of the tenants, which is right there in JP Morgan, which is there in the Dynasty Business Park. We got the Disney office, which is right there in the Solitaire Corporate Park. And last but not the least, we talk about the Logitech Park, which was developed by our own parent company, Breakup India. And we have the prime tenants there, which is Accenture. So this is a very prime neighborhood which we have in our vicinity. To talk about the recent transactions which have happened in the 3 to 5 kilometers uh, uh, range, I would say, are these some of the transactions on the lease front in 3 to 5 kilometers. We have the range which is hovering between 117 to 140, which is the lease rentals which are prevailing in the nearby vicinity. As low as 116 for the 215 FPM building, and goes again up as Logitech Park, which is our own development. We as a company, Recon India, were co-founders the same. So I think that hovers at about 137 and commands a higher lease rentals. Again, definitely talks about the group as well in terms of the development and the and kind of building we develop. We've actually been developing for the last 35 years. As a platform, I think we keep a fiduciary responsibility to get our investors and partners the best entry point for the transaction. So when the average rentals are hovering at about 123 per square feet, we have got an opportunity for you at 83 rupees per square feet. very welcome and very long term from that perspective. Now, again, I think as we say in real estate, that assets and profits are defined and revenues are defined if you enter a transaction at the right price point. Even if you buy a residential or buy a warehouse or buy a commercial office at a wrong price point, there is no profit and there will be tenancy risk as well. But here we're talking about a transaction which hovers in nearby vicinity for 3 to 5 kilometers, starting 13,400, which is in the Windfall building, and which goes as up as at about 18 odd thousand, 17,900 odd in the Akruti Trade Center, which is the same developer Uptown. I think the range, the average comes out to around 15,000 rupees of I would say transactions which have happened in the recent past. And again, here we're talking about the best of tenant grade A building at a pricing about 11,661, which is 20% on discount. So assume that you are not a fractional ownership player and you're buying a strata deal as well. I think any investor in the country who's a I would say personified investor will also want to have a 15-20% of discounting. They're right here with that. So right here, and which is a deterrent for our success. Today, if you see any kind of transaction on, just to take you to basics, if you see any transaction in the country which looks very lucrative in terms of the yield, so says 3 transactions, 1 transaction is at a particular rental, but the price is high, but the building which is at a very conservative, realistic rentals, like the way we have, is always a better bet for any other investments, because then the tenant will be here to stay and you don't have any issues at the later front to renegotiate with your I would say tenants for the near future, like situations are there in the current scenario. So again, looking at both factors, we are absolutely at the right blend in terms of right lease and right building. Talking about the asset again, as I mentioned, the developer is Uptown, which is one of the renowned developers in Bombay. Again, any building is defined with the overall MNCs around in the building. So, and I'm sure if you have a building which is owned by individual owners and has small shops, etc., it does not take it to grade A. That is why grade A building is defined by key factors, which are the tenants, very importantly. Secondly, the security, which is 24/7. You have the power backup, you have the high-speed elevators, and you have a firefighting system. So any building, when it's determined as grade A building, there are a lot of factors which actually go behind the entire contours of the building. So proudly to say, yes, we are a grade A building, which is again at the heart of Bombay city. Now to talk about some of the tenants around in the building. So it's a 3 lakh square feet building in total of the area. The structure is G+7 with 2 basements. Glass facade building, a pure corporatized building for sure. On the ground floor, we have the Axis Bank, which is the 3rd largest private sector bank in India. On the 1st, 4th, and the 5th floor, we got a corporate called coveted. This is a 250-year-old Swiss multinational which is into fragrances and cosmetics. So it's a prime corporate. Again, on the 3rd floor, we have got Breakup, which is a global leader in the chemical and the ingredient distribution. Along with that, we have the Reliance General Insurance on the 3rd floor. 6th and 7th floor has been occupied by us, which is a recent development. Talking about the floor plan, this is unit number 601, which is occupied by ICICI Bank. The area is around 20,271 square feet. This is the layout for the entire building, and then that floor plate. 701 again is occupied by Infoline. The total area is divided into 2 parts. You got the 701, which is occupied, then you have the rest of the area where we tagged it as 701D, which is the terrace area. We've taken 1/3 of the that similar area, which amounts to about 5,255. So total area is what we have is about 15,500 square feet, which is there by Infoline. Some of the promising building picture is important, and you can see that right here at the center, Bombay, and most of you have must have crossed this building as well. Again, these 2 names, I think no introduction for these 2 names. I think these 2 names are the 2 prominent names in the country. I think if you talk from a millennial to a versatile investor, we all know ICICI Bank, which is a leader in the banking financial services. Infoline in the security business and the financial services business has been here for long. To just quickly run you through ICICI Bank. ICICI Bank again has been a leader in terms of banking and financial services, where they have about 5,300 branches and over 15,000 ATMs, and they are present in 17 countries. So yes, definitely it's a multinational which is a tenant with us, because they're actually all across around the globe as a bank. Some of the revenue figures which are right there, they've marked in about 77,000 crores of your revenues in 2020 to the figures recently. And asset under management again is 13,77,292, which is very, very important to see the kind of this scale they've achieved as a bank. Some of the recognitions, the best companies to work, again, the best retail bank in the country in the seventh row, and it's a more sustainable company by Business World. Looking at the recent price trends of the bank, I think in March 2020, the share price was at about 550 odd, and as we speak, is hovering at about 624, 25. And every platform, be it Arihan, be it Motilal, be it Sharekhan, or be it Dolat Capital, everybody is recommending the bank because it's the most promising bank in the country. It's absolutely in news as a bank. I think we're talking about some of the mergers they've done recently. As a bank, they've actually signed an MOU with MUGF Bank in Japan, one of the premier banks to take care of the Japanese in India. As a private sector lender, ICICI reported about around 19.1% of increase in the standalone net profit. Right, so that is very, very welcoming. Again, the drivers of the market as well. So again, Nomura stated that Axis, IndusInd, and ICICI are the dominating leaders for the market. In the Infoline, I think this is again a very, very prominent name in the financial services like ICICI Bank. It's been a leader. It's been all across in terms of servicing clients. They've got about 10,500 employees currently in the country, and they manage a large book of asset under management. So again, on the share prices, if you see that it was again 200 odd, and it's now reached to about 296 in the recent times. So again, 82% growth, which has been recently seen in the share prices of the tenant. Again, as I mentioned, it's got various verticals. They've got the home finance. They've got the new vertical called 5paisa.com, which is so they're in news pretty much. I think that the country is talking about as a promising future for India as well. Now, taking you quickly to the terms and financials of the deal. ICICI Bank, again, as I mentioned, it's a 9 years lease with a lock-in of 3 years. The lease timelines are February 2021. It started. The lock-in is till February 2024. And again, escalation, which has to be is about 12.5% every 3 years. The area, as I mentioned, required is about 20,271 square feet. As of the market, we are at a very, very valuable rent per square feet, which we required at about 84 rupees per square feet. Rent per month is again 16,96,680. And the annual rent is again about 2 crores and 3,60,160. So again, we have a 6 months security deposit, which is right there. And this again talks about the fresh lease being in place. And along with that, the furniture and fitting are done by the tenant. That's very, very important for any lease. I think when there's skin in the game by the tenant, it's all more welcoming. In the Infoline, same line, we have a lease term for 5 years, again a lock-in for 5 years, again escalation of 2.5%. The area acquired again is 13,610, and 1/3 of the terrace area, which accumulates to about 5,200 square feet. Total area is again 15,361 square feet. Lease signed for 82 rupees. Rent per month is about 12,57,262, and the annual rent again 1.5 crore. Here we have a 6 month deposit, is right not mentioned here, but we have a 6 months deposit coming in from the tenant. The lease term starts at about March 2021, which is this month. The lock-in for another 5 years, 26, and the lease term again 26. Taking you to the ownership cost breakup. Today, as I said, the cost of premises being acquired at 11,661. The cost of the premises is 41 crores and 55 lakh. There's a stamp duty and registration and of 3% at the moment. Very, very importantly to mention, as a company, we have thankfully achieved a 25% mark over this asset, and we are moving on to the 50% very quickly in some days, I would say. So again, we plan to raise money for this asset and actually get it registered within March as well. So I would request for every investor, partner, and customer for us to look at the investment within March as well. We're taking about 5% right now, and the 95% will call off in March itself to save the 2% stamp duty registration cost. There's an acquisition fees, which is right here mentioned here, which entails a lot of other things. We can detail that out to you. The charges of 29 lakh 75,000, legal fees which is given to our legal partners, which is the 10 lakh rupees, and again a reserve of 10 lakh, which entails a 6% return towards investors pretty much. So this is the acquisition cost, and total comes to about 44 crores and 54 lakh and 35,000, which is the cost which we plan to raise from the market. Taking you to the financial model, again, the rent from ICICI is mentioned here, rent from Infoline is mentioned here, total rental income. There is a rent top-up for the first year from our end that makes it 9.2% as a gross yield. The interest on security deposit, as I mentioned, is taken care of from a 6% assumed rate. And this is the entire financial modeling, which is from year 1 to year 4. And this is the cash flows which are mentioned here for all our investment perspective. The growth rate is very importantly, we envisage as a 7.5% growth rate for a 4-year term. Though we've entered at the right price point, and we see the market for the office space going very bullish in the country. We see that over a period of time that our targeted IRR will be 15.4%. We've taken an account of growth rate of 7.5%. That's why we're targeting at about 15%. Now, sensitivity is very important, keeping into all factors. We enter the building at the right price point, and then the building is A-grade, as I mentioned in detail. We envisage, so this is the capital appreciation parameters and sensitivity check which we're doing at the moment. So even if it's 4%, 6%, 8%, and 10%, we still see ourselves hovering between a 6 to 8% and a 7.5% of annual capital appreciation of the asset, which makes it to 1.68x of your money multiplier or investment multiplier. So again, this is again as a platform we are looking forward for a very welcoming kind of growth sensitivity in the next 4 years. The terms of investments are we take a 1% management fees, which entails all costs. Again, 10%, we're talking about a 10% of our performance fees over a 8% CAGR or a hurdle rate, which we're talking. So again, over a period of time, if we make money for the investors, we would like to look forward for a performance fees for us as a platform and a manager, pretty much. So again, March will be where we'll be closing the asset. So I don't see any reasons for us to think about this kind of development, this kind of a rate, this kind of a yield. So again, a prime location, which is very, very important for any asset, a grade A asset. Please understand that today, if there are grade B, grade C assets in the country, the first lookout for any tenant, any corporate, any multinational will be the building quality. That's very, very important. That's where you differentiate between the men's and boys. That wherever the asset is long term, it's the corporate gets inclined to have its office right there. Again, a 9 years lease for ICICI, a long term lease. It's not a short term lease. It's a long term perspective again for the bank, for the back office for the bank. It's a 5 years lock in from Infoline, the 9.2% yield in year 1, 15.4% target. So these are some of the reasons. Looking at the model of fractional ownership, I think it all talks about that this is the future that we are here to stay in terms of the transparent platform for all our investors. About hBits, hBits is a company which was formed in 2019, backed up by a 35-year-old group, as I mentioned. We aspire to become the largest real estate exchange platform in the country in the next 3 to 5 years. Right now, our footprints are back in Delhi NCR, Bombay, Bangalore. We're broadly a 20-member team, which actually are there. We're planning to expand in the near future as well. In terms of the deliverables of the platform, we take care of the asset acquisition and selection, which is very important process. To get the right asset from all the perspectives it's a detailed task, and we, along with the internal teams and our external advisory and vendor partners, I think we take care of a technical and asset related due diligence. We acquire the asset, and actually we have it in a SPV model where investors invest and they become a part of the entire company, an SPV, and they are offered compulsory convertible debentures and equity in that particular company, which holds the asset. And the asset is held by the the investors, and we manage the asset for which we charge a 1%, as I mentioned. In terms also, we also take care of the liquidation of the asset in terms of taking care of the fact that the liquidity is managed for the asset in terms after a particular point in time. And in the interim, if there are any customers who really want to exit through our existing networks, we ensure that the asset is taken care of and we get the residuals to the customer. That's a little about hBits, and we look forward to become a larger platform. This is a very important slide. I think it talks about our parentage and the experience of the group, which I mentioned earlier. At the moment, we have about 3,000 plus crores of asset under management. We have a 35 plus years of experience, which we carry across various businesses related to commercial real estate. As a platform, as a group, we have about 10,000 plus registered users, investors, and customers, which we are proud to say have been acquired through the right process. The tenants in all our buildings and developments, in Jericho, one of the global renowned players, CMA, CGM, Fasus as a research center, Viante as a knowledge partner and a KPO for us, ATPI, Audi Time. So these are some of the partners which are really dealing with us, and we've been manufacturer for them for the fractional ownership model, I must say, in the past as developers. That's our trusted partners, again, some of the renowned names. You will know about these names in the country as credible entities. Deloitte happens to be our structuring advisor. Shardul Amardas Mangaldas is our legal partners, which is a renowned name again, and I think they have a deep setup and experience as legal entities. JLL happens to be a valuation partner, structureship done by Universal. ICICI Bank happens to be our escrow partners and bankers. And all the data point, what I'm mentioning right now here on the slide and moving forward, my team will be discussing with you or detailing with you, will all be driven by CRE Matrix as a data partner for us. So these are, I think, all the partners who are privileged partners for us and actually have been helping us to build the platform. Along with that, I also wanted to present to you our past company structure partners, Madhya and Gandhi, which are one of the prominent players in the country. So I have a quick video and snippet for you where Mr. Ahuja would like to detail it out for our investors and subscribers, that how will the allocation, how will the entire flow work for the fractional ownership at hBits.
Hi, this information is really meant for the people who are going to be subscribers to the private placement scheme which is being circulated by the company. The purpose of the scheme is that if you choose to subscribe, the monies that you will be used to invest will give you both shares and compulsory convertible debentures. That money will be used by the company to acquire a real estate property, and therefore in an indirect fashion give you joint ownership along with others into that real estate property. The compulsory convertible debentures will also carry a coupon which will be linked to the yield or the rental that this real estate property is going to provide you. So that is, I think, the broad purpose of this arrangement. And the company will be managed, and like any other company, you will have shareholders. You will be a shareholder of the company. All shareholders will get all rights as they would get under the Companies Act and whatever is provided in the Articles of Association. There will be a property manager who could be appointed by the company and changed from time to time. And that property manager is a person who will be appointed by the company, by the board of the company from time to time. And in addition to that, the scheme will envisage that whenever there is some opportunities of exit, the company can take the appropriate calls at that time, and the members of the board and the members of the shareholders can take an appropriate decision to sell. So that's the broad, I think, conspectus in terms of the way it works. Of course, please look at the Articles of Association. Please look at the provisions of the private placement memorandum and all of the other terms and conditions before you go ahead and subscribe. But this is the broad nature of the scheme.
In terms of why hBits, again, has a lot of reasons, multiple reasons. I think we have in terms of why hBits, because one, it talks about the experience. I like to detail that first. As a company, we got a detailed experience in terms to understand real estate from the word A, and we understand the fact that how do we develop, how do we lease out, what's going to be the entire background in terms of how do we develop a commercial property. A low ticket size today, everybody in the country aspires to invest into a safe real estate asset. And it's wishful to say everybody wants to invest into $1 million asset by not investing $1 million check. So here's the opposite opportunity. The ticket size as low as 25 lakh. If you go behind and think about what can you buy in real estate at 25 lakh, I don't think so that the property prices have gone up and you won't get a yield-making asset in the country. So yes, this is an opportunity with 25 lakh and you can have a monthly yield, a robust yield coming your way for a longer term period. Convenience, yes, very importantly, we are a data-driven, digital kind of a platform. We always have our customers to see all the perspectives right sitting back in other part of the country or the globe as well. Because if you invested into a Bombay, you don't have to be essentially Bombay. Ultimately, you can do a transaction digitally. We will send you all the information which is required for your consumption. So returns, yes, I think the best in class. We've got the rental yields coming from 8 to 10% and IRRs of 16 to 20%, which we charge over a period of 5 years. Again, hassle-free ownership. Again, you become a part of the company. You get the strongest of, I would say, instruments and be a part of the company which holds the asset, CCDs and equity, as I mentioned. Improved liquidity, very importantly, as a company. I think we have got multiple ways because you enter at a credible transaction, yield-making transaction. So we've got multiple ways we can try and help you exit the transaction. One way is actually getting onto our resale platform, very importantly. Second, taking you back to our distributors, our partners, our customers and investors, which is more than 10,000 in number, as I mentioned. All investments deals on the transparency basis is very, very important because every document, even if you buy a large asset or strata deal in terms of a 20 crore transaction, we are individual owners. We look at all the aspects, legal, market research report, data point report. So everything what we're giving to you as a large transaction in place. So this is transparent. The dashboard is right available for every investor to see how much money has he given in, how much is the yield which has come out, what is the analytics in terms of the long-term perspective. So everything I think is right there, and we plan to take this domain and this business in a very long-term fashion. All these reasons entail to actually have you with us as investors. Just to talk about the leadership, Shiv happens to be a founder. He's an MBA from Harvard Business School and is a BS Engineering Physics from Stanford University. He's worked with Citi and Stanford Management Company, and I think he's come back to India laying foundation for two prominent businesses. One is hBits, which I'm a part of, and Worklaw, which is a co-working business. My background, I come in from a multi-background. I was a part of various business services. I was a part of banking, mutual fund, life insurance, fundraising with Pyramid Capital, and a part of the broking firm, broking business as well with Pyramid Capital. And I think with about 19 to 20 years, 9.5 years of experience, I think here we are to present the future product to you guys. Very prominent names in the industry. Mr. R.K. Nair, he happens to be our key advisor on board. I think he was a board of member for ICICI Bank, trustee for Axis Mutual Fund, and a very, very well-known and named in the industry. Mr. Shishir Dalal, again, he's comes in from investment banking and he's a corporate advisor for us, former partner for PwC, and actually has set up all Dalal and Shah, founder of Eros Management Services. So these are two names which are advising us on the platform, and I think we can't go wrong with advisory coming from these credible entities. Some of the entities which are fully funded with us, we've already subscribed them. This is the 41 Deutsche Park, which is in Nahur again, and 42 Deutsche Park. These are two the buildings which are subscribed by us. Very, very important slide again. Our parent company, I think it really talks about itself. Our credentials for the last 35 years, I think we as a company are known as Raycon India, and actually as a joint venture engaged in property investments and land development. I think we are backed up by a German billion-dollar business, and we are present in UAE and now in India. So these are some of the entities. We've got two entities. One is Raycon India, and the website is rayconindia.com, and we have a co-working business which is called Workloft.in. So as a company, I think we talk about how do we grow from here. There's the new business. We've been in media for the last 3 to 6 months. We tried reaching out as a new platform which can be potential. Some of the media news, write in Economic Times, Business Times, and Tribune, Hindustan Times, and these are some of the verticals. Now, the only point which I want to summarize from my side is again the future for real estate investments will be very clearly a synonym of safety and yield-making assets for sure. Transparency will be a key for any investor to put in money. So, looking at all the factors which I've just mentioned in the presentation, we look forward to bring in multi-assets in multiple parts of the country. Right now in Bombay, we are looking forward to Bangalore and Delhi, then Hyderabad and Chennai as well. So we plan to build in a larger number. The only thing is on this asset, we're trying to close by 31st of March and register the asset. Could save 2% of the stamp duty. And also, again, to summarize, I think I look forward to all the investors to look into the asset. They can reach out to us. We got a team details, and we have a team also to reach out to you. And anywhere you need support, we'll be happy to share all the information we have on the shelf, and we look forward to associating with you on the long term. Now, I'll request for the FAQ sessions, and I'll have Shiv also right here with me. Thank you so much. Have a great day and have a great weekend. I think one of the questions which have actually come in, it's about the ICICI Bank branch or its office. It's a ICICI back office. It's not the branch. And IIFL, again, they have the security business and they have the entire team sitting out of the seventh floor as well. Any other questions? I think we're happy to answer. And thanks to all of you who've actually joined us, taking out time and actually joined us today. Okay. Some of the questions which have come in, what would be the coupon rate? It will be in line with the rental yield. It will be backed up by the rental yield for sure. What's joined late? Okay. How does the exit happen? Jitendra, exit will definitely happen from three perspectives. One, first, let me talk about the fact that when you enter a transaction at the right price point and the building is A grade, and as I mentioned in the presentation as well, I think when it's A grade as a building and you have a great entry point and the perspective of tenants like ICICI and IIFL, I think the exit will be quite easy automatically. But nevertheless, to talk about, we as a platform have 10,000 registered users and channel partners, and we got a large base of other partners who can actually help us in the exit. We can list the asset on our resale exchange as well, and at ongoing basis, we can have the customer to exit. But definitely, we will invite and request people to actually join in from a get into a subscription or join in into the asset from a 3 years perspective minimum, because we want after 3 years when the escalation kicks in, definitely the pricing, the overall asset will take it on the next level. So anyway, we welcome people, but yes, exit can happen to through three mode. Also, last but not the least, we are also looking at some arrangement where we can have a annual arrangement where some of the some of the family offices and corporates and HNIs can actually come and buy the asset. We can have an annual sale kind of a plan. If you are, we're working on it actually, so we'll come back to you. Broadly, I think we have definitely a exit route possible. Okay, to talk about the risk for the investors, I personally feel that there are multi modes of real estate which is happening in the market. You have under construction, other assets as well. Our asset, in terms of first the structure, is close to nil execution risk pretty much, because you've got a delivered building, you've got a tenant right in place, which is an A grade tenant. The building does not carry any risk overall because the building is insured. One. Number two, you're getting into a transaction which is leased out at the right price point with the right tenants. So I don't see any risk on the transaction. Also, to talk about the structure of the transaction, we are getting the entire asset into an SPV. Now, ultimately, the investors hold the SPV. So there is nil control from our end or an external end. We are actually giving the asset right in the name of the investor. So there's no risk as of I see in the current market as well, because it's a very transparent kind of a transaction. Every details in terms of the lease and every details in terms of the transaction associated has been duly shared by every investor. Is there any buyback option? I don't have any buyback. We don't have any buyback options at the moment, but definitely at a given point in time, and like I said, every year we'll try and plan something for our investors so that they can have a smooth exit. As we detail in our financial model right away, and Mr. Poddar, I think the idea is that yes, we want to be very clear and transparent in terms of our financial modeling and detailing. So there are three ways: one, to all our investors who are coming in and who are actually investing with us, and partners who are partnering with us, we share the complete model, complete paperwork in terms of related to the asset. So 9.2% is not confusing. We've anyway given it clearly that this is something, a rent top up from our end. The rent agreed with the tenants is 8.2%. And one first year, there's a top up from our end, from the management fee perspective. So we're topping up the rent actually. Thank you so much. We are also looking at future collaborations with your venture. I think, thank you so much. I got a message. I'll send you the financial modeling, Mr. Dubey. It'll be 0.5% broadly. The 44 crore asset, yes, it's going to be broadly 0.5%. In a 25 lakh investment, you become the owner of 0.5% exactly. And certainly, we will share the detailing in terms of the financial model as well. There is, as such, we've cut the block for 25 lakh rupees as a block. This comes in from a perspective that as a company, when we form an SPV, the regulations say that you can have as high as 200 investors in a company coming and getting the secured instruments. There is no asset chance to invest a little less on the, we kept a block of 25 lakh. Still, my team will get in touch with you for further detailing. It's a commercial building, Mr. Sheda. The land is leasehold, definitely. So 30 plus 30 plus 30, the leasehold land. When people come in collectively for a common cause and they're getting the residuals on time, so I don't think so there is any dispute that can arise between investors because everybody's independent. So everybody's investing for a cause. Let's understand, if you're getting a building right there, you're getting your rentals on time. There is no other matter which needs to be discussed in terms of the operationalization and execution. Definitely, if it could have been an under construction building, definitely there could have been areas where we need to address. But here, the cause is very clear. So I think every investor is coming in to actually take the yield and take an appreciation over a period of 3 to 4 years. So I don't think so there is any discussion in terms of if there's any dispute amongst the owners. Any other questions? Happy to answer. One question, definitely. We manage tax for the investors. For the company which we are setting up for the investors, definitely we will manage the tax. We got the tax partners, we got the corporate partners, the legal partners as well. But obviously, the residuals which are coming your way, that needs to be managed at your end on the taxation. Again, I think there's a question in terms of we've actually shared the net yield definitely from a gross to a net, and I will be very honest with you, being coming in from a company and the background in terms of financial services. I think this we've seen that everywhere. I think there is a factor that you get into a transaction into primary under construction project. There is no detailing available, no market research available, no legal documents available. There is no transparency of any mode. But in our case, I think we have shared initially the gross yield, the net yield, the charges which we are charging as a company, what are the legal papers, all our reports, all our vendor reports. So I think can't be more transparent than that. Actually, that's what I feel. Any other questions? Okay, the question. both questions are the same. I think what happens if ICICI cancels the lease at a given point in time, if this transaction did not until 25 lakh, and I go back to my investors and we talk about a 20 crore transaction as well, the only thing you can do in any pre-lease transaction is take a security. In the same case, we have the best of tenants which have signed an agreement. I think ICICI is the epitome of banking services in India. They signed a 9 years lease with us with a 3 years lock-in. 3 years lock-in definitely means that they're here to stay. And in terms if they leave early, and there's a security of 6 months from both the tenants which have been taken up. And I think we will do the release from our end, and probably will do the needful in terms of ensuring that the 6 months transact 6 months your advancing which has happened is taken care of from a legal format. I think they can't cancel as one of the questions stated that they cancel the lease prematurely. It cannot happen. They have a lock-in which is signed with us. And for IIFL, I think it's for 5 years. Yeah, so I'll just request Shiv. Hi, Shiv. Thanks for tuning in. So some of the questions I've answered.
Hello, Ankush. Sorry, a bit of technical difficulties. I hope I'm audible.
You're audible, and thanks for joining in. I think I would request that the members who've actually joined in, now that the founder of the business is right here, so any questions, any technical questions, if you can just bounce off. So I think I'll just set the context right. Till the question which came in for the tenant lease, I think the question which is now coming right now here, the last two questions.
No, great. So I think there's a question on the, I don't know if this has been covered, a question on the capital appreciation and the potential of the micro market. And I think what's to answer that question, what's very interesting about the opportunity is that we're getting at a significant discount, both in terms of rentals to the market, which is at 83 rupees, while Andheri market generally trades at 100, 110, 120 rupees. So that makes it a very attractive opportunity to release it at a higher price point. And even more important than that is the capital value that we're getting at, which is 11,661, which again, conservatively speaking, in the next 5 years can easily reach 15,000, 16,000 rupees per square feet, given that's where other properties and other assets, even in the same property, have traded at. So from that sense, it's a very lucrative opportunity because the upside is captured in the entry price itself, which makes it a very attractive opportunity.
Yeah, I think last two questions were one very important. Am I audible, Chief?
Yep.
Okay, I think last question was interesting, which says in the worst situation, if there is no rental due to, let's say, economic crisis, building will be sold off and proceeds distributed. How will the proceeds be distributed?
So in case there's no rental and there's no tenant, which looks very unlikely because ICICI has a 9-year lease, and they paid a significant amount of stamp duty to make it a 9-year lease. In Maharashtra, if it's above 5 years, there's a large stamp duty component. So ICICI's intent is there for the long term. IIFL as well has a 5-year lock-in. So in that sense, at least for the next 5 to 9 years, it's very, very secure. But in the worst case scenario, when there's no rental, then we won't be earning any property management fees. And yes, at the end of the day, the investors still own the property, and there is obviously value in the asset itself. And that's what makes it a very safe and secure investment, in the fact that even worst case scenario, when there's no rental, there's still value in the property itself.
Something to talk about on the gross rental and taxation as well, actually, Chief.
Absolutely. So yes, 9.2% is the gross rental yield. And then post that, there'll be deductions in terms of the property management fees and the property tax. And out of that, what is distributed to the investor, that's as per their own, that'll be distributed as interest in CCD. And that is up to each investor's tax calculation. Various investors have found ways to kind of make it a zero tax investment for them after what is distributed in their hand. So depending on each case-by-case investor scenario, we're always happy to have a discussion with the investors to make it work for them and make it the most tax efficient for them.
One question came in, which is more talking about the big. If there's a big loss on the building, is HBIT responsible for that, or how investors can claim? It's an insured building. The floors are
Exactly.
insured. The building is definitely insured. So in eventualities is taken care of.
Correct, because of the insurance.
I think one request, I think, Shiv, if you can just share the overall vision about the platform and the building, and something to add from your end, that will be great.
No, I think Ankush, thanks a lot for the presentation, and thanks a lot for all the attendees who are here for attending. We're kind of overwhelmed by the response that we've received and the interest in the asset that we're seeing, and I think it's very, very positive that we're kind of very selective on the assets that we choose, because in the long term, what we care about is in 5 years, in 4 years, in 6 years, when we do sell the assets, the investors do make the IRR that we're targeting. And kind of in this asset, we're very positive on that, and that's I presume that's why we're seeing such an overwhelming response. And I think in the longer term, and then over the course of next year, we'll be listing a few more assets across the country as well, so investors can have their pick across different assets as well.
I think two more questions have come in, Shiv.
So I think there's a question on the anticipated expenses related to the 2 floors. Yes, these are factored in. These are factored into the purchase price of the asset as other charges, all the costs into running of the SPV. CAM, though, basically the common area maintenance, that is on the tenant. So that's factored into the rental agreement that's between the tenant.
I think kind words. I think we look forward to reach out to all of you who've joined in. I think it's a pleasure to spend time for all of us. I think we had a great interaction. Only a few words from my end, with a little bit of experience I carry in the multi-space of financial services and real estate. That overall, looking at yield, we would like to answer these questions. I think just two more, Shiv. We actually detailed out the past projects in terms of our delivery. We'll again share with you. I think we have done multiple products as a developer, but obviously 3 projects are being funded on the platform on hBits. We'll share you the details as well. So, okay, continuing to the fact, I think moving forward, I think the only fact of consideration is the quality of the building. I think A plus grade building always has a full value in terms of corporate. That's what I believe. And obviously, the entry point is a key deterrent for any profits, any rental yields, or any tenants to come into the building. I think some important factors are there. So we look forward for your support. I think my team and me will reach out to you individually. I think we are nearing at about the next levels of the fundraise, and we look forward for a positive March for all of us, and look forward to associate with you in the long term.
Great. Thank you, everyone.
Thank you so much. Thanks. Have a good day.